Let me state the obvious. The situation in Greece is very fluid. We've had ups and downs, but a real intensification as talks broke off in the weekend, and this referendum has been called. We've had the Greek state going into arrears with the IMF yesterday, and obviously the bank holidays there. So without question, in Greece, the situation has intensified, and as a product of that, it raises the possibility of some contagion more broadly into European economies and within financial markets. So that's the overall risk, and our job is to worry about risk. It also is to put in place the protections against those risks, and it won't surprise you that we knew that there was this possibility, and we have been preparing for it. Now, so why is the direct impact on the United Kingdom small? Well, first thing is there's very little exposure of UK banks to Greek entities, including the Greek state. Secondly, there's hardly any activity of Greek banks here in the UK. It's tiny relative to our economy. And thirdly, we have been working with our European partners, in part to help them put in place over the last number of years much more protections to prevent that so-called contagion, that jumping of risks in Greece into the core of continental Europe through improving the banking system, through improving the toolkit for the European Central Bank and other facilities for European states to draw on to limit this contagion. And that time has been well spent. Those defenses are quite strong. They might be tested in coming days and weeks and months, but there are good reasons to think not just that the direct exposure to Greece is quite low, but this indirect route can be managed.
It looks this morning as though the Greeks may have compromised to an extent. Do you take encouragement from that? Presumably the best thing would be if we could revive some sort of deal and not have a referendum this weekend.
Well, it's, as I say, it's a fast-moving situation. It is in the best interests of all the parties to come to an agreement, both the Greek authorities and the European authorities, and we'll do whatever we can to help that, and we certainly urge them to do so. But it's complicated. It's complicated by past decisions. It's complicated by the facts on the ground. It's complicated by issues around debt and the structural reforms. We don't want to get in the way of those discussions, but we would just encourage them to move to a conclusion as quickly as possible.
Without getting too technical, what are the contingency plans that you've drawn up to limit contagion?
Well, one of the issues is just to make sure that the Greek banks and subsidiaries that operate here in the UK have the liquidity that they need to operate, and if they don't, that they would be shut. And so, for the Greek banks, that's the responsibility of the Greek authorities. We have some oversight of them, and we have oversight of liquidity, and their liquidity is held here at the Bank of England. So we take those responsibilities. For the Greek, there's one Greek subsidiary, banking subsidiary that operates here. We're their supervisor, so we've made sure over the last few years they have a lot of capital, a lot of liquidity, and we have a good daily view into all of that. And so those aspects of heightened monitoring and oversight and management that is in place. For the Greek banks, we coordinate with the Greek authorities and the European authorities. For the subsidiary, it's our direct responsibility, just to be absolutely clear. So there's that element of it. Secondly, there are a series of conversations that we have with the European Central Bank, other European banking authorities, with the Treasury here and via the Treasury with European treasurers, to make sure that broader contingency plans are ready, and those contingencies could be put in place if necessary. Quite frankly, they haven't been necessary because we haven't seen this spillover of the risks in Greece into broader financial markets or into broader Europe. But again, our job is to make sure that they're ready. I don't really want to go through all the technicalities of that, not just because it's too technical, but also it makes them less effective. But you can be assured that we have been preparing for this possibility. And thus far, the coordination both here in the UK, in my view, is exemplary, and with our European partners is what you would expect.
Is there anything you would have done differently had you been in Mario Draghi's shoes over the last few weeks?
There's nothing I would have done differently if I'd been in his shoes over the last few years. No, I think President Draghi and his colleagues have very importantly, put in place not just specific decisions, but the actual tools that they put in place, their ability to buy sovereign bonds, their ability in order to provide stimulus to the European economy, just as the Bank of England did several years ago, provide stimulus to this economy. That's hugely important. But also the ability to take action to protect the so-called integrity of the euro, to ground action in keeping the euro together. That's hugely important because people in financial markets know that they will act, and the consequence of that is not to speculate against challenges within the euro. So he and his colleagues have done the right things. They have worked very hard to continue to provide liquidity to the Greek banking system. They continue to do that. They haven't been increasing, but they've continued to provide liquidity. So we're fully supportive of the actions that he and others at the ECB have taken.
Right. Now, obviously, in the Financial Stability Report published today, Greece is only one of a number of potential risks to the system that you outline. I almost came away with the impression that we should be more worried about China than Greece.
Well, I think China, obviously the second largest economy in the world, our banks, and this is a good news story, have much greater exposure to China than they do to Greece. I'll just give you the numbers, if I may. The Greek exposure is about 1% of their common equity. Chinese exposure is 3.5 times their common equity. Chinese and other emerging markets, I should say. I should be clear. It's a broader set. Now, that's a good thing because that's a growing part of the world, and it's part of being global banks. But it does mean that a slowing Chinese economy, a restructuring in the Chinese economy, which is what is happening right now, has some implications through our financial system and ultimately through demand for British products. So it is important. Now, these are more medium-term issues. Greece is, the crystallization of risks around Greece, this is an immediate issue. It's changing by the hour. We're very focused on that. Issues in China are more to the medium term. They're more related to the opening up of that economy, the development of that economy. But yes, in the fullness of time, China is absolutely more orders of magnitude more important than developments on the periphery of Europe.
Now, another risk that you mentioned is in the housing market, and specifically the buy-to-let market. Are there policy responses required here to calm down that market that go beyond the Bank of England's remit?
Well, a year ago, we sat down and we had taken some measures on owner-occupied housing. So, that element of the market, what we had done there was to take out insurance. We hadn't restricted things that were actually happening, but we had taken measures to, in effect, prevent banks from doing what they normally do in the past, which is to move from responsible underwriting standards to reckless underwriting standards, and we all end up paying for it in the end. So we've taken out insurance against that, owner-occupied, and we've kept that insurance in place, and that's the right thing to do, and we've seen some positive developments in the housing market as a consequence of that. Then, at that time, we decided not to take measures against buy-to-let, partly given the relative size of buy-to-let, partly because of the better underwriting standards at the time in buy-to-let, a variety of factors. We discussed it again at this meeting, and we again decided not to take any action. We could take action with respect to buy-to-let because it is within our remit if there's an activity that could affect financial stability in the United Kingdom. We can make recommendations to the relevant bodies to take action. In fact, that's what we did a year ago with owner-occupied. We made a recommendation. We didn't have direct responsibility. We made a recommendation to the PRA, which is the group that regulates the banks, and the FCA, which regulates sort of non-bank providers of mortgages, and that worked. So if we needed to do something for buy-to-let, we could make a recommendation. The judgment of the committee is we do not need to do something at this stage. Right.
Now, you also talk a lot about misconduct among banks. A couple of weeks ago at Mansion House, you were indicating that you thought the relationship between the banking sector and society should be reset. And yet in the Financial Stability Report, it points out that there is deep mistrust towards the banking sector, particularly from SMEs.
Well, it's interesting, Ian, one of the pleasures of this job is I get to go around this country and meet businesses and people throughout the United Kingdom. I have to say, in every region, every time I go outside the city of London, which is frequently, one of the questions I'm asked is about the banking system, it's often quite blunt. Why haven't bankers gone to jail? What's going on in the city? There's a series of scandals. And the reality is that this series of misconduct has undermined trust in the system. And it's overshadowed what is a very good news story, which is the improvement in the capital and liquidity, the overall strength of the banking system, and a good news story which is incredibly relevant to what we've been discussing in terms of risk from Greece or China or the housing market. It matters that our system is stronger. So we have to fix this. We have to fix these issues with respect to misconduct. And the answer isn't just to fine the institutions. There have been huge fines, £30 billion worth of fines on UK institutions. That's equivalent to all the capital they've raised privately since 2009. It's about shifting greater responsibility to individuals. So I'm able to better answer those questions that I hear around the country. Why haven't individuals taken responsibility for the mistakes that have been made? And not just mistakes, but outright misconduct in these institutions. And Mansion House and the associated reports around that show a way to rebalance responsibility to individuals so that we have a system that merits the trust of the people.
Now, in the report, you call for more monitoring of cyber risks and an improving of resilience in the system. Do you think the current financial system is sufficiently resilient to withstand cyber attacks?
No, well, I think that any complacency like that is a recipe for that risk crystallizing. In other words, this is a constantly evolving risk. Whether it's state actors or private cyber attacks, you have to prepare for them. So what we've done is we've developed, along with industry, a penetration testing mechanism, so a way of testing the resilience of banks, including the Bank of England. We've been subjected to it. But how well are you protected against cyber risk? And this isn't just, I think the key thing I'd leave you with is it's not just about the technical aspect of it, technical defenses but it's how senior management is seized with these issues, because you have to understand the nature of attacks. You have to build not just resilience, but your ability to recover from attacks, and you have to do it constantly. And it has to be one of the questions that the chief executive officer and the board are constantly asking themselves, or you won't be ready. So we're trying to play our role in helping that along, but I wouldn't be complacent at all about the resilience of the system to cyber, because as soon as you become complacent, it's self-defeating.